Good morning, everyone. So today's news are like this. FCNR deposit can get increase in the banks. So this is the headline. So for understanding this news, first of all, we have to understand what is FCNR. FCNR is a type of an account, okay? It is a type of an bank account. So basically it is the foreign currency non-residential account. So basically, it is a special kind of account for the NRIs. NRIs are the non-resident Indians. So basically, these are the Indians that are not living, that are currently not living in the India, and but they have the citizenship of India. So basically, FCNR bank accounts are the accounts for the fixed deposit, and they store the money in the foreign currency, and the interest that the depositor get uh, from the bank is also in the foreign currency. And when they withdraw the money back after a certain period of time, then they get their money back in the same foreign currency. So basically, normally in India, the bank deposit the money in the rupee currency, but let's say there is a foreigner, like there is a NRI, and who just deposit, uh, who want to deposit his or her money in the foreign currency, like dollars or any other foreign currency, then in the Indian bank accounts, then they will open the FCNR accounts, and then they store their money there. Okay. So now, so now let's move forward, and so now let's understand why. How the FCNR deposit can increase, and also is it good or not? And if it is good, then how it is good? Okay. So basically, what happen is like this. Uh, so what happen is like this. So when NRI deposit their money in the FCNR account, then the bank convert uh, that foreign currency into the rupee, and then they lend that money to the uh, other people or the customers of the bank who need money. And so basically it is the fixed deposit, so the NRI stores in these accounts for the fixed deposit, so the bank have to pay them back after like 3 years or 5 years of the time period, like according to the agreement. So in that time period, the bank convert that foreign currency money into the Indian rupees maybe, and then they lend that money to the basically they lend their money to the other customers. So this is how the bank works normally also. Uh, and then after a certain period of time, when they have to give back the deposit to the like NRI customers, then they basically buy the dollars, and, and like so basically they buy the dollar by selling the rupee, and this is how they basically give back the money back to the NRI customers, and they also have to pay back the interest in the same currency also. So basically, the value of the rupee can fluctuate. It can also, like, the value of the rupee can decrease or increase. So basically, so s- so so basically, in the previous video also I have explained what is hedging and what is the hedging cost. So it can be possible that the value of the rupee get decreased, and the bank have to like s- like they have to pay more rupees to buy that same amount of the dollar. So to basically uh, protect themselves from this, they basically sign the agreement with the foreign like so basically they sign the agreement with some organizations where it is written that where it is written that they will like buy the dollar at this price, what like like they will buy the dollar at this price of the rupees, um in like uh, so basically whatever the price of the rupee at the time, it does not matter. uh, so that is called hedging. And to buy, so basically to buy that contract, the bank has to pay some amount of money, and that is called hedging cost. So the recently I think RBI has announced that they will help uh, in the hedging cost, like they will have the PSUs and banks, all those government organization. So basically in this case, what will happen, like if the RBI help or pay certain percent of the hedging cost, then now the bank, so the so now the bank cost will decrease. Like earlier they have to pay the principal amount back to the NRI customer. They also have to pay the interest, and they also have to spend some hedging cost to buy the dollars from the rupees. So now if bank is paying some percent of, so basically if bank is helping in some percentage of the hedging cost, so now that cost that the bank have to spend is now get decreased. So now, so basically this will help the banks. It will save their costs. Also, now if let's say if bank is, earlier the bank is giving 4% of interest to that FCNR deposit. So now they are saving some cost of the, like they are saving some money in the hedging cost. So now they can increase the interest that they are paying to the NRI. Like let's say if RBI helping in 2%, then they can increase the, so basically they can increase the interest by 1%, and then at the same time they are saving 1% of the money. Okay. So if the interest rate of the FCNR deposit will increase, then the NRIs will deposit more money in the FCNR account. And this is how the they are the, so there is a probability that the FCNR deposit will increase in the banks for this thing. And this will, like this thing is good because uh, like the foreigners are storing their money mainly in the dollars, like they are depositing the money in the dollar or any foreign currency. Mainly it is, I think, dollar. So now the banks will have more dollar because FCNR, like the foreign, like the NRIs are storing their dollars in the banks, but now interest rate have increased. So what will happen? The, like the NRIs will store more money into the like FCNR accounts. So the banks will have more dollar, and so like this, like so basically if banks have more dollar, then it will help them, like they can purchase, like they can lend that dollar to some organizations, like to some companies, who need that who need the loan in dollar to purchase something from outside of the country. So this is how, like, it will benefit the NRI customers because they will get more interest. They are getting more interest because now, like, banks cost has decreased. Also, the bank will have more, like now they will have more dollar, so it will strengthen the bank financial health. Uh, so this is the news. Now, like, there are some more points related to this news. First of all, like there are different, like there are other types of accounts also, like the NRE or NRO. So basically, NRE is just like the non-residential external account, and NRO is the non-residential ordinary account. So let's understand these two terms. First of all, let's understand what is NRE. It is the non-residential external account. So so basically, FCNR account is the fixed deposit account. So where NRI have to deposit the money for a certain period of time, like 3 years or 5 years or 10 years. Okay. But NRE is like a saving account. But in these accounts, the money gets stored in the rupee, not the foreign currency. So, let's say there is an NRI who is working outside of the country. He sent some, so basically, he sent back some money in India. It's like he sent back some money in the India to the India. So at that time, first the bank will convert the foreign currency money into the Indian rupee money, and then it basically store that money, and it will work like a saving account. Like they can withdraw the money anytime. Okay. Similarly, we have NRO. Like, so basically, there's some difference between NRE and NRO. NRO is like a non-residential ordinary account. So let's say there is an NRI who is living outside of the country, like in any foreign country, and he's working there. But that NRI has some property in India also, and like that property is on rent, and that NRI is earning money from the rent. So the money that he earned from the rent or any resource in the country, that money will get stored in the NRO account. Okay, because so basically these are the two type of accounts that are also related to the NRI. Now, like also so so basically also bank has announced that these FCNR deposits will not be count in the CRR and SLR. So let's understand what these two terms are. CRR is the basically it is just like the so basically it is like the cash reserve ratio, and the SLR is the statutory liquidity ratio. Uh, so basically, CRR, the cash reserve ratio. So basically, like the people deposit their money in the banks, and banks give the interest. Uh, okay, and so basically, the people deposit their money in the bank. So now, bank basically lend that money at some interest rate. Okay. So now the RBI has rules like that bank cannot lend all of its deposit. Okay, so this is the rule that RBI has formed like that, imposed like that, that the banks cannot lend all of its deposit. Okay, so this is a rule. So the cash reserve ratio is the percentage of money that bank has to keep with the RBI. So let's say the bank has 100 rupees of deposit, and RBI said that 4% CRR. So it means that 4% of 100 rupees, that is 4 rupee. So it means that bank has to kept 4 rupees with the RBI. Similarly, we have SLR. It is the statutory liquidity ratio. It means that the bank has to basically invested X percentage of the deposit in the high liquidity asset. It means that bank cannot lend that X percentage of money, and it have to invest that X percentage of money in the high liquidity asset. So let's say the bank has the 100 rupees of deposit, and if XLR is like say 6%, then the bank and the CRR is like 4%, then it means that bank has to keep 4 percentage, the 4% of money, 4% of the deposit with the RBI, and 6% of the money bank has to invest in the high liquidity assets. High liquidity assets can be the cash, gold, or something where the bank can retrieve money very fast. If it lend the money to someone, then like there is some time period like of the 2 months, 5 months, 6 months, 1 month, sorry, 1 year, like that. So if bank lends all of its money, then if anyone wants its money back, then the bank will not able to repay that money to the customer. So RBI has formed some regulations that bank has to keep some money in a high liquidity form so that if anyone wants their money back, then they can repay that money easily. Also, for the security purpose, some percentage of money they have to kept with RBI. So this is like CRR and XLR, sorry, SLR. So, so basically, so now the bank has said that the deposit, the uh, FCNR deposit will not be will not be count in the CRR and the SLR. So it means that the deposit that the bank will get from the FCNR account will not be count in this. So now, so it means that bank can lend if bank want, then the bank can lend all of its like complete of its FCNR deposit like this. So this is the news basically. That is all for today.